the 2020 November paper. Yeah, the liquidation and distribution account. Here it is. It was out of 59. You see, when you've got this, just this question perfectly, you can pass. So you must make sure that every time you go into that exam, you are ready to just for your liquidation and distribution account. All right, so let's start. Remember what I also told you as per my notes, that our liquidation and distribution account will always have a heading. And where do we get our heading from? We get our heading from the facts they gave us here. So here we see that they say A and B were married in community of property to each other. A died on 13 March 2019. He is survived by his wife B, his major son C, and D, a major son from his former marriage. E, his minor son predeceased him. And then we go down just to check if there are no clauses in the will. Okay, now we see here they say in his will he was accepted by the which was accepted by the master's office. A bequeathed his estate as follows. So when you see like this, you see something like this, ne? Unzu, are you sleeping?
Yeah, no, I'm listening, Sis.
Oh, okay, you are
I'm
listening.
looking and focusing.
Okay, so you see this part, like when they tell you in his will, ne, they mean that, okay, when he died, he had a valid will. So we know, I get it, there are two types of dying. If you die without a will, you die intestate. If you die with a will, you die intestate. So we just write this for you. If you die with a will, you are, testate. And then without a will, it's intestate. So we see that, okay, his will stated this, which means now the deceased died testate. Okay, now we've got our facts enough for our heading. We are gonna start. So we are gonna say the first and final liquidation and distribution account of the late, let me go back, of the late A. Okay, no, the first and final liquidation and distribution account of the testate, because he died with the will, we're gonna say testate, estate of the late A. Then you can make like a surname for A because you have to state their particulars. So you can say A Mavundla, then brackets, you put his ID number, you write it out, who died on. So we see that they say A died on 13 March 2019. So we know he died on 13 March 2019. All
How can
right.
I get his ID number?
His ID number, you just make it up. You just make up
Okay.
an ID number, yeah.
Okay.
And then you see that, okay, he died on 13 March 2019. Who was married to B. Mavundla in community of property. So for Mavundla, like when they are married in community of property, it is advised that you also state the name of the spouse that they are married to, as well as the spouse's ID number. So you see here, this is the wife. I'm putting her here with her ID number, who was married to, who was married to B. Mavundla in community of property. And
So
then,
I create so their names and surnames and even
yes,
then
if
say
they
their
don't
ID
give you,
number.
yeah, like you see here, they said A and B. So you
Hmm.
obviously have to make up a surname and then write their ID numbers. You make up an ID number. So we
Hmm.
are done. So from our elements that we know we need to highlight. So we are done with the particulars of the deceased, which is A. Mavundla and his ID number, the date of death, there we have it. The marital regime there, we have in community of property, and then we need the master's reference. So here, the master's reference, you always also make it up.
Hmm.
So they will
Okay.
give you, they will never give it to you. You just need to make up any reference that you can find, like 1234/2019. Then that's your master's reference number.
Why you put it in 2019? Because
Remember he died in 2019, so most probably that his estate will start
yeah.
being
Okay.
administered in that year.
Okay.
Yes. And then now we go to our account. So our first account is the liquidation account, which has assets in it. These are immovable property. Immovable properties, it's like your houses, your land, your sectional title, a farm. That's immovable property. And then movable property, it's not like your cars, your jewelry, anything that you can think of that is movable. Shares also that are not sold, we also put them under movable. And then we've got claims in favor of the estate or cash. So now this is like money paid by policy, investment accounts, loans that maybe we collected from people that owed the deceased, money that maybe we collected from SARS because SARS had to pay the deceased. It's things like that that goes in cash and claims in favor of the estate. Okay, so now at this stage you don't have any question.
Yeah.
Okay, cool. So now we move on. It says, okay, let me just hang on. I think my garden people are here. Let me just close one window. Oh, just the door actually. You can take my phone now. Yeah, no, I didn't download Kitty. Okay, and then it says, no, you can sit. I want you to lie down nice. Just take out my charger. Sorry, just a minute. Take off the charger, Nana. Take off the charger and then sit. I don't know why you're dragging my charger on the ground. I want to sleep here. Okay, come sit. Me, I want to sleep here. Okay, just 2 minutes. I want to give her my phone. Okay, then you could actually sleep on that other couch. All right, it then says Ace House at 27 Dale Avenue, Durban, valued at 1.7 million. There is a bond over this property in favor of Absa Bank. The amount outstanding, the amount outstanding on 13 March 2019 was 570,000. When the executor settled the bond, the outstanding was 574,000. So now, go take that thing out. So now we know we've got a house, right? And the value of our house is there on that couch, my love. It's 1.7 million. Because here is it, they gave us here, which is the value of the. I've got garden people here, and it's a little bit noisy, but yeah, they'll be gone just now. So it's 1.7 million, right? And then when you read here, it then says there was a bond over the property in favor of Absa. So which means their house is still owing. At date of death, the house was owing 570,000. And then when the executor settled the bond, the outstanding was 574,000. So remember, I told you, I think in my notes, this is there, and also in my videos that I've been uploading, that we in our liquidation account, we only account for things up until date of death of the deceased, right? So at date of death of the deceased owe a bond in the amount of 570. For the purposes of our liquidation account at this point, we are not going to record this 570 or 574,000. What we are going to do is we are going to account for this 570 in our liabilities. They are down there when we get to our liabilities as a claim against the estate, because Absa Bank will have a claim against the estate. And then you see that, okay, this was what was outstanding at date of death. But then the estate further incurred an additional 4,000 Rand interest. So what does this mean? So this means that after the, like, let's say from the 14 up until the executor now here was had to pay and settle the account, we had an extra 4,000 Rand that we need to pay. However, in our liquidation account, we do not account for income or expenditure which was incurred after date of death. We have a separate account for that, which we call our income and expenditure account. So for that reason, we will not record the extra 4,000. We will leave it for the income and expenditure account. Do you have any questions with regards to that? Yeah, fine. Okay. So then now we move on. So you see number 2, it says a motor vehicle valued at 260. So we know a motor vehicle is a movable property. So you're going to take your motor vehicle and put it here. It's motor vehicle. Motor vehicle, and it's 260. That's an easy one. And then we move on to item 3. It says fixed deposit with Capitec Bank. The capital investment was 500,000. The executor collected a check for 517, which included interest of 11,000 up to 13 March. So, okay, we know that an investment is a claim in favor of the estate. So we're going to say Capitec fixed deposit, right? And then because now you are dealing with an investment, you must always divide it into 2. You record the capital amount that was invested. So our capital amount is the 500. A invested 500 at Capitec. So you take your capital amount, which is the 500,000. And then we see that, okay, when the executor collected the money, it was in total 5,700, including interest of 17,000. In that interest, only 11,000 was up till date of death. So what does that mean? It means that the rest of the 6,000, it's money incurred after date of death, and for that reason, we are not going to include it in our liquidation account, but a separate account where we account for things that we incurred or monies that we collected after date of death. So what you're going to do is you're going to take this 517, 517,000, then you minus 511,000. You are going to get 6,000. The difference should be 6,000. And then you're going to say interest. The interest at date of death is 11,000. Now the 6,000 that is here, that forms part of this to make it this total, will go to your income and expenditure because it was after date of death. So never let this confuse you. You will always see they said 11,000 up to the 13th March 2019. And he died when? On the 13th of March 2019. So this is not just the date in Genji. You must always look at the date. Then it always tells you that, okay, up till date of death, this is what we had. So now because we know that the 6,000 here was after date of death, we're going to put it in our income and expenditure. Any questions?
No, I understand that one.
Okay, no problem. And then we go to household contents. It then says contents valued at 160. So please tell me, Gail, what is this? This one. Let's do it together so that you can also be able to understand and engage. And where I see you making a mistake, I'm able to assist you.
Household content value.
Yes, household contents valued
Yeah.
at. So where do you record this household?
We can record it under movables.
Okay, yes. And which amount do we record?
160,000.
Yes, household contents, 160,000. Beautiful. And then you can do what's this? Item 5 as well, the next one.
7 accountant bill names with the style bank is the sum of 16,708. Saving. This one can fall in a cash claim in the favor
Yes.
of state.
Yes, yeah, you see? And why are we including it? Because they are married in community of property. So because they are married in community of property, we are going to include it. If they were not married in community of property and they say the wife had a savings account in the amount of, we were not going to include it. But these ones, they are married in community of property. So which means whatever belongs to the husband belongs to the wife, whatever belongs to the wife belongs to the husband.
So if not, I'm going to record it in the expenditure, saving and expenditure.
Which one? Pardon?
This one, if not, they are married in community of property.
No,
I'm
no,
going to record it.
no. What I was saying is, remember, they are married in community of property, so they
Yes,
share
I do.
everything. Yes,
I
but
hear you on that one.
yes. So
But
if they were not married, ne? So if they were not
mm,
married in community of property, and the facts say they were not married in community of property, and then they say something like this. Let's say here, you see our heading. Let's say they said A died and he survived by his wife. Okay, let's say A and B were not married in. Rato, please reduce your volume, my love. Rato, your volume. So let's say they say A and B were not married in okay, let's say were married out of community of property without accrual. And then you get a fact like this. So if you get a fact like this, it would mean that this one you're not going to include it because it has nothing to do with the husband. They don't share their property. But if it's marriage in community of property, whatever belongs to the wife, even if it's jewelry, if it belongs to the wife, it still forms part of the estate because they are married in community of property.
okay, sir.
Yes. All right. And then number 6, you can also do that one.
66,000 due to the Standard Bank credit card. And an insurance policy with the Standard Bank that settled the full amount of the outstanding. This one, 66,000 due to Standard Bank credit card. And had an insurance policy with the Standard Bank that settled in the full amount outstanding. This one can fall under the cash and the claim.
Yes.
Yeah.
Okay, so we've got the Standard Bank, Standard Bank policy. So now tell me, I carry they are saying Moses, okay, where is it? They say 66,000 due to the credit card. So yes, we've got two things. We've got a loan and we've got a policy and we've got a debt. So this 66,000 rand that is due to the credit card, what are you gonna do with it?
The insurance policy standard settled in the full amount. Confusing this one is.
Okay, so let me help you now because you might get it right here and then you go mess it up at a later stage. So here you are working with two scenarios, ne? One, there is let's just start on there's on the insurance policy. A had an insurance policy with Standard Bank that settled the full amount outstanding. So which means we had an insurance policy with Standard Bank valued at 66,000. That's number one. And then number 2, we also had a credit card debt with Standard Bank. So when this policy paid out, we received the money and immediately the money had to go to Standard Bank, the credit card. So you're gonna have two situations. You're gonna have the amount here because it's a claim in favor, you are getting money, but then you have to come back and fix it here as a claim against the estate. Why? Because it's an insurance policy, it's paying out. But we had an agreement to say that if I die and the policy pays out and the credit card is owing, please take the money from the policy and pay the credit card. You understand?
Mm.
Yes. So that's what's gonna happen. So you're gonna have your Standard Bank credit card loan. Yeah, credit card, and then you have the same 66,000 here. So sometimes they will give you, maybe let's say they say A had an insurance policy with Standard Bank that paid out 40,000. And then here then they say 30,000 due to Standard Bank credit card. So you know that okay, you are gonna have your 40,000 here and then the 30,000 here. You must always just bear in mind the differences in the amount. It will not always be that it's settling the full amount. Sometimes it might just be a partial loan. So I hope you understand that this is it's your seeded policy as per my notes that you bought. You were working from two scenarios. This policy is paying out. We also had an agreement with the insurance policy to say that, okay, when my Standard Bank policy pays out and my credit card is still owing, just take the money and pay it over to my credit card debt. You understand?
Mm.
Mm. Is there anything that is confusing you that I should maybe explain or give you an example?
No, I understand. But you have started if they said 40,000 due to the Standard Bank credit card and A had an insurance policy in the Standard Bank settled the full amount of 30,000. You said I'm going to put 30,000 under the claim against the estate.
Yes, so let's say I wish I could, okay, let me just do this for you. Let's say the scenario says, let me see if I can copy this. How does it now? Okay, let me see if I can copy this and then make an example for you. So let's say they say 30,000 due, and then A had an insurance policy. A had an insurance policy with Standard Bank that settled um A had insurance policy with Standard Bank in the amount of, okay, let's say that paid out 40,000. So in this situation, you see here, the policy paid out how much?
Okay, 40,000.
Yes. So where are we gonna put our 40,000 that the policy paid out?
This one we're going to put it at the first day or claim in the favor of estate.
Yes. And then you see this one, it's the 30,000. Where are we gonna put this one?
Claim in the against the estate.
Yes, you see, so that's just the example that I wanted to show you that sometimes, yes, this one you see it's 66, it's both 66,000, so you know that it's gonna be 66 on top and then 66 at the bottom. But sometimes the amounts differs. So you must always just make sure that you know which amount you're gonna put and the amount that you're gonna put at the top in favor of the estate and the amount that you're gonna put at the bottom against the estate. All right, I think we are on the same page now. We can move on. And then it says SARS final assessment due by the deceased in the amount of 19,700. Okay, you know what? Okay, no, it's okay. So what in this instance, what would you do with this one? How would you deal with the SARS final assessment?
This one here for claim against the estate.
Yes. Beautiful. Yes.
Because
So
it's
this is
full.
gonna be a claim against the estate, and we are gonna put that amount. Okay, but I don't wanna start putting them out because we already skipped number one, the loan. So we'll just come back at a later stage when now we do our liabilities. And then item 8 says insurance policy with Sanlam on A's life in the sum of 2 million with B as the nominated beneficiary.
Sissy, you said number 7, we're going to put it under
Yes, under claims against the estate, as you said.
liabilities. Oh,
Yes,
now
you're
also
correct.
so we're focusing on number 1. Sure.
Yes, you're
Let us
focusing
focus
on
on
this
number
one.
1. Yeah.
Yeah. So
Insurance
advise on number 8.
insurance policy on Sanlam on its life in the sum of 2 million with B as the nominated beneficiary. Can you put this one on the movable properties? That is, but we can go and put it under the distribution account for B.
Remember what the principle says. The principle says anything that has a nominated beneficiary does not go under our under our liquidation account. So yes, maybe you might find it confusing because they are married in community of property, but the principle in liquidation is that any policy that has a beneficiary. So the moment you see it says nominated beneficiary is B, then you know that okay, this one you are going to skip it because there's a named beneficiary. Just refer to my notes, the ones that you put. Anything with a beneficiary, we do not put it in our liquidation account because it has a named beneficiary. When it pays out, it pays directly to the person.
Okay.
Yes, and then we're gonna move on. It said, then you can do 9.
Insurance policy was all the mutual on the A's life. The maturity value of 850,000 and the surrender value was 410,000. There was no nominated beneficiary or no nominated beneficiary. So the maturity value insurance policy claim against in favor of estate and then we're
Yes,
going to
so it's a
take
claim in favor of the
maturity
estate.
value for 850,000 and the surrender value was 410,000.
So which amount do we take?
Oh wait, maturity. Surrender value. We're going to take in 150,000
Yes, and why?
because yesterday that is the one which is maturity. So what is the surrender value?
Okay, so you see here it says, okay, so number 1, green light, obviously, we are putting it because there was no name nominated beneficiary. That's why we are putting it, right? And then number 2. So then they say the maturity value was and the surrender value was. The policy is on whose life? It's on the deceased's life because A is our deceased that we are dealing with. So when a person dies, the policy matures. If the person had not died, the policy would be surrendered. So in what instance would you use a surrender value? Let me make a mistake, an example for you. So let's say the fact says this. So let's say the facts say insurance policy with old mutual on B's life. The maturity value was and the surrender value was taken by the deceased. Taken by the deceased. Or A, whichever, or A, whatever you want to say. So now A in this scenario would have taken a policy on B's life, ne? He was paying the premiums. He obviously took the insurance policy hoping that B is gonna die first and he will get the insurance money, but it does not happen like that. B is still alive. So remember, if I insure you, and instead of you dying first, I die first, no one is gonna pay for those premiums, number one.
Mm.
Right? So now that policy needs to be surrendered back to the estate because the person who was paying for the insurance policy is no longer there. So that's when we will take now the surrender value.
Mm.
Because the A would have taken the insurance hoping that B dies and the money pays him. But unfortunately it did not happen like that. The one who took out the insurance died first. So when it says like when it's like this, you know that okay, it was on A's life. So because A has died, the policy has matured.
Mm.
Mhm.
So how are we going to put it?
So you see, in this instance, you take the 850,000 because A died, the policy matured, and there's no nominated beneficiaries. But in this instance, A died first. The maturity value is 850. The surrender value is 410. Now we are having this policy surrendered back to the estate because A is no longer there to pay the premiums. So we are gonna take the 410 and put it under our claims against claims in favor of the estate because it is being paid back. We are only getting the surrender value because that person is not there anymore.
Okay.
Yes. So
So what about the 150?
we know you just leave it out. You're not gonna record it anyway.
Okay, okay.
Yes.
So 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 my scenario, okay, in my question here, we're going to check. So what about 410 now?
You leave it out. Because the policy is not being surrendered. We have
Okay,
nothing to do with this amount. You just forget about it.
okay.
Yes.
Mm.
It's like having a contract, ne? Your
Mm.
contract says, okay, um, you are taking a policy in your life. um with this amount. So they give you the different amounts to say that okay, your maturity value when you die, it's this amount, and your surrender value, it's this amount. So this is basically like that. It's a contractual clause that says this is what you have should the policy mature, this is what you have should the policy not be matured and needs to be surrendered back. That's about it.
Okay.
Yes. And then it says shares in XYZ Pty Ltd valued at 86,000 and sold by the executor for 90,000. So how would you deal with item 10?
Mm, it's going to be cash in favor of state.
Mm-hmm.
So share in X1 LTD valued and dividend sold by the executor for 90,000. We're going to record 90,000
Yes.
and then we'll leave it. This is 860.
Yeah, the 86,000 you leave it. And why do you leave it? Because remember, when you sell something, I can have a Nike shoe which is worth 850, and then I manage to sell it for 900. The extra money that we received is the 900, so the 850 has nothing to do with us because the extra money we received is what I managed to get out of the sale. So same scenario here. Yes, the maybe the JSE or whatever said the shares are the share value is 86,000. But then the executor is smart and was able to to sell them at extra at an extra 4,000, which now makes it our 90,000. So
Mm.
this one you also still just forget about it because also the principle is that we give preference to the sold for price. So if you've got a valued price and a sold for price, you always take the sold for price.
Mm.
Yes. And then we've got number 11.
Number 11, okay. Share in a PQR limited value at 7,000 and sold by the executor for 9,000. It's going to become the same.
Yes, and then yeah, how do we record it?
On the claim against cash claim or against the estate, we're going to
No,
record 9,000.
no, be careful not to confuse it. It's claim in this one is claim in favor of the state, the other one is against. So don't
Oh,
just make sure,
or share
yeah.
in a pool limited value and sold by the executor.
Then the amount that you record is which one?
9,000.
Yes. So we're
Says
gonna
why? Share in a limited value. Against the estate, this one.
no, it's in favor of the estate.
In favor of estate, okay.
Yes.
Mm,
Remember, it's shares and we sold
mm,
those shares. So
okay.
we are just collecting money into the estate.
Mm.
And then you can read number 12.
Insurance policy with a momentum of A's life in the sum of 1 million. A son they paid the premium and was the beneficiary. The total amount of the premium paid by day to momentum plus 6% interest was 38,160. So we said there is a nomination. We're going to do it under the distribution account.
No. The moment you see he was a beneficiary on B or B was a beneficiary on so and so was a beneficiary, you must
Mm,
always remember you leave that out. So remember D is the son, ne? You must always
mm,
ask yourself, how does this affect the estate? Number one, D is the son, and then he took a life insurance policy on the life of his father. D paid the insurance premiums. And when the policy pays out, it's gonna pay out to who? To D. So do
mm.
you see that this policy has nothing to do with our estate because there's always a beneficiary somewhere else. It's going to pay someone else, not into our estate.
Okay, if there is a beneficiary, even on the
Ye-
distribution account, I'm not going to include it.
Yes, you're not gonna include it.
Okay.
Mhm.
I'm going to leave it.
Yes, you're going to leave it. So you will see at a later stage at our estate duty account where we are going to record certain policy that paid into the estate, but it's not every policy. Like even this one, you still wouldn't record it in your estate duty addendum because it has nothing to do with the estate. It's paying someone else.
Mm,
Yes. All
mm.
right, then we have, it says administration expenses amounted to 30,000. Now this is excluding master's fees and executor's fees, which you must calculate.
I must go
So
and calculate it there.
yes, so we must calculate that. So now this one tells us that we are now starting with our liabilities. So before we can go on into our administration expenses, please calculate the total value of our assets. I don't have a calculator with me, but if you can just do the honors, you calculate how much we've got for our total assets.
Total assets, okay.
Mm.
170,000. 1,700,000. Yeah. 260,000. 160.
Hold on, this one is
160 rand.
one.
160 rand. 106,000.
Yeah, it's 1,260,160,000, 500,000, 11,000. Just calculate
500,000.
everything.
Mm. 1678. 1678. 66,000. 50. Okay, great. Okay, 1, 2, 3. 9,000. State that 3 million.
Okay. It's 3,662,000.
662,000. 662.
Yeah.
780 rand. 780 rand.
Okay. Okay, just a minute. I'm counting now.
Mm.
All right. So we have calculated our total assets and we are done. So now, once we are done with our assets, we move on to our liabilities. All right, dude. So we are done with our assets. Okay, so remember number 1 here. Please read the scenario.
For number 1.
Yes, for number 1.
Okay. His house at 27 Dale Avenue, Durban, valued at 1,700,000. There is a bond over this property in favor of Absa Bank. The amount outstanding on the 13th of March was 570,000. Then the executor settled the bond. Outstanding amount was 574,000. Okay, 570.
Okay, so cool. So which you see in this amount, we still have a bond. And what is a bond? A bond is also a liability. All right. So which means we've got a bond that is over the property of the deceased, which we need to account for in our liabilities account. Okay, so now we have to remember that, okay, number 1, it's a bond. It's a bond that we have that we need to account for. We also have SARS that we need to account for. Is there anything else? And then I think we also have the 4,000 rand there that we need to account for. So these are the things that we just need to keep in the back of our head to say that, okay, now we are working from 1, 2, 3. So before you just start with your thing, you must always allow yourself just to go back and check, okay, which properties are owing, etc., etc. Okay, now we're gonna start. Let's go to our item. I think it's 12. So yeah, okay, no, it's 13. So 13 said administration expenses amount to 30,000. So you're just gonna take this 30,000 and put it here. 30,000. It's your administration expense. But then they say excluding master's fee and executor's fee. So which means you still have to calculate your master's fee, master fee, and executor's fee. So tell me, how much is the executor's fee?
I'm going to use a 3.5%.
Yes, perfect. So you are going to take your total assets. You're going to take your total asset times 3.5%. That's your executor's fee. So please calculate it and give me the amount.
What about this 30,000?
No, remember the 30,000 is, they already gave us that, okay, in administering the estate, this is what we incurred. So the 30,000 is fine. And then they tell us that excluding this and this, which you must calculate. So now we must calculate master's fee and executor's fee. So that's why sorry.
You took
Yes.
30,000 and said it's what?
The 30,000 is the administration expenses. Look at number 13. Just read number 13.
Oh, I see. Administrative expenses.
Yes.
The process of administration. Okay, it's fine. I hear you. So the answer for that one here, woman.
So
128,000.
128,000 and
197 rand. Point
okay.
37.
All right. Okay. And then the master's fee, it's still total assets. Then you can continue. And remember, I gave you the formula in the notes. Yeah, what's the formula?
The formula for master C.
Yes.
Process, I'm going to check the amount here.
Mm-hmm.
Let me check it. 3,602,708 minus 100,000.
Mm-hmm.
The answer is, if I took 3,602,708 minus 400,000, the answer is 3,262,000.
Yes, there.
7,808 rand.
Yeah, and then what's next? Remember, the formula does not end there.
No, I am continuing.
Yeah.
So, the amount divided by 100,000.
Okay. So which means the first answer you got, the 3 million, you're gonna divide by
100,000 for what?
it's the formula.
Oh, it's the formula.
Yes. And then you got the answer.
32,600. 32,000.
Is it
So,
32,000?
oh no, it's 32.6278. 32
Yeah.
rand.
Okay, then you got that answer, and then that answer times.
Oh, times 200.
Yes. Then what's your total answer?
Was 6,525 rand. 0.56.
Okay, wait. Oh, plus the extra million. So it's gonna be, it should give you a max of 7,000. The reason for that is that when you count, when your estate is above 3.6 million, automatically, you know that your your master's fee is gonna be 7,000. So so let's say you are in the exam and it gives you an amount that is above 3.6 million or 3.6 above. You can just show the calculation to show that you know them, but the max that you are gonna record is your 7,000, which is the maximum that you can charge for master's fee. You're not allowed to charge more than that.
That is
You understand?
the rules.
Yes, it's the rule. So when your estate is more than,
Man.
yes, when it's more than 3.6 million, you know that your final answer will obviously be this amount that you are gonna get. It's mostly that you're gonna get the 7,000 max. So you don't need to actually calculate it. You can just write maximum 7,000.
So I must calculate if the total asset is below what?
Yes, below that 3.6.
Oh, below 3. I'm below 3,500,000. What, below 3.6.
Yes, below 3.6, calculate.
Okay, sure.
Then yes.
Okay, sure.
So now we are done with our administration expenses. We go to our executor. Okay, we calculated the executor fee. Oh, we don't need actually. And then now we've got our claims against the estate. So we identified one, which was the Standard Bank credit card. And then what about that? How whole bond against the property? What are we going to do with it?
Number one,
Yes, which one are we going to record?
Manya. The amount of 113 month, but when the executor settled the bond, the outstanding amount, we are going to record 5,704.
Yes, 508, 500,780.
74. Yes.
Yes, which is Absa Bank. And we've got 570,000. And then which one also did we identify as a claim against the estate?
So, sister, what about the executor settled the bond? The outstanding amount was 574,000.
Okay, so let me explain it to you like this, that when you die, your bond, you are owing 300,000. Ne?
Mm.
So we know that because in our liquidation account, we only account for up until date of death, up until everything up until the 13th March 2019. We account for those. But now when the executor comes wanting to settle your account, they find that we had now interest, let's say, of 2,000. So when we went to the bank to find out how much the interest was at date of death, it showed that you owed 300,000. But because we are still busy with the estate, and by virtue of us still being busy with the estate, it does not mean that we will still not incur interest. I mean, it's a bank. The bank continues life as per normal. So when we go back to pay, we realize that, oh, okay, now we've got 4,000 extra in interest. Ne? So in total, when the executor paid, they paid this amount.
Mm.
Yes. But however, because it's an extra 4,000, we are gonna account for the 4,000 in the income and expenditure account because it was after date of death.
Yeah.
Yes.
Okay.
Yeah. So we're only gonna include the 570, which was up till date of death. So we've got our Absa bond, and then okay, which other liability did we identify?
Another one is SARS.
Yeah. Then Nicole, we owe SARS, so we need to pay SARS. SARS final assessment. Assessment. And then we are gonna have 19,700. So you see, we are actually done with our liabilities now. So we need to calculate the total of our liabilities. You are gonna start here and calculate all of this together. Then we come up with a total. Please do calculate for us.
Assess.
Yes.
You didn't spot the treasury is the one that are going to fall under the claim against the estate.
Which one? 3. No, remember 3, it's we are claiming in favor of the estate. The deceased had an investment of 500,000. At date of death, we got interest of 11,000. And then which means the rest of the 6,000 was after date of death. But it's an investment. So we are gonna put that 6,000 in our income and expenditure account because it's money after date of death. Yeah. So just to break this down for you nicely so that you can understand, It says the executor collected a check for. This is the check that the executor collected, which included interest in the amount of, interest of 11,000 up to date of death. So up to date of death, we had interest of 11,000. When you minus 17,000 minus 11,000, it means the extra 6,000 interest was after date of death.
Hmm.
Mm.
Okay. I hear you.
All right, please do the calculations then.
Hmm. At 820,000.
Okay. 820,000.
897 rand.
197
and 30 cents.
and 30 cents. All right. So that means this is the total of our liabilities. So it is a rule, ne? So we've got what we call estate duty. Estate duty is payable to SARS on an estate. However, if you are married and your spouse dies, the first surviving spouse is not gonna pay estate duty. So once you see your fact saying was married, your estate duty will always be this, ne?
Mm.
It will always be nil. So then once you've got your nil for your estate duty because the deceased was married, the wife is not gonna pay estate duty at this point. You then take this amount minus your liabilities, and what do you get?
I take total assets.
Yes, total assets minus total liabilities.
Mm. Hundred and 20,000, 897.8. Sources 3,602,780. 820, 897.8. The answer is 2,841,842 rand 882.
802 rand, like this.
882.70. 0.7.
70.
Yes.
Oh, okay. So there is your so now this is the balance available for distribution. So which means when we take our assets, we minus the liabilities, we are left with this amount of money. But I'm gonna stop here because I want to give you another exercise that you do the principles so that before we move from the principles, we know that you can understand the basic principle in the liquidation account. So now we've got a recap account. A recap account, what we do in a recap account is that we take the money that we received in the estate, ne, to see if it's sufficient to pay our liabilities. That's the purpose of a recap account. So in our recap account, ordinarily what we would do is, but we're not going to do it now, we would take these amount, all this, add it together and get a total for it. Once we got a total for it, we take that total and we put it here. And then we take that this total, we will minus this, which is the, we minus the liabilities. And then if there was like a legatee is now a specific bequest. Let's say there's a line that's, yes.
Oh, I take the total and I minus the available for distribution account.
No, I made a mistake. I meant you minus this liabilities. You see, it says cash and assets reduced to cash. So this would be the amount from claims in favor of the estate.
I added.
Yes, you add everything, like everything that is here, you add it. Let's say, however, there was like a motor vehicle that was sold and we recorded it here. Then you'd also take that amount because we sold it and then add it to all of this, which is the cash, and you put it here. So you're gonna take that amount that you've put here, you minus your liabilities, but your liabilities, obviously, it would be this amount that you are gonna put here minus your liability. If you've got a cash legacy, it's like you find a line that says 60,000 must go to my son or 50,000 must go to the Mandela Fund. That's a legacy, ne? Then if you've got something like that, you would then put that legacy here. And then estate duty, because the estate duty is nil, we already spoke about this. The wife is not going to incur estate duty at this point. Then you would obviously say nil. And then what are you going to do? You're going to take this amount.
Is it?
Yes.
The wife does not pay an estate duty because they are married in a community. So if not, okay.
No, as long as it says married, ne? Then your estate duty is going to be nil.
Or married, as
Yes,
long as
it's only going to be different if they are not married. But we will get to those scenarios. You don't have to worry yourself about that now. I'm just explaining the other accounts. I think we can have another session later on, but I just want to explain to you the other accounts. So you're gonna take,
yeah.
So you're
Explain
gonna,
to me first.
okay. So you're gonna take that. Remember, would have calculated your claims and in favor of the estate total, and then you take your liabilities, which is what you got here.
The amount of liability directed, the 820.
Yes, the one that you got here, and then you put it here. And then you take your legacy. Your legacy, it's money that it's either money that was specifically bequeathed to someone or something like that. Then you put it like here. If it's not there, you just write nil. Like in this scenario, there's no legacy. There's no legacy, so you put nil. And then here, it's estate duty. You see the estate duty above, it's nil. So you're also gonna have a nil. And then you would have taken now this, the cash and assets reduced to cash, which is this part. You might minus everything that you got here. Then your total will be either a surplus or a deficit. So when you get a positive amount, it's a surplus. If you answer that you get, it has a minus in front, we call it a deficit, which means our cash, the money that we have in cash, is not enough to settle our liabilities. That's what basically it would be meaning. And then our distribution account, now this is where we would be distributing. Same thing here. You see here, we said balance available for distribution. Once you start your distribution account, you are taking this amount. You just bring it down here. You see? And then now you are going to be distributing. We are distributing what? We are distributing the house, the movable content, as well as what we got from our cash recap, the money that is remaining from here after paying our liabilities. Then we know that, okay, this is what we are distributing. So you see the importance of getting your liquidation account right, because you are basically taking now this amount and putting it here. You're taking this amount, you're putting it here, you're taking your nails and everything. So you cannot afford to make a mistake in your liquidation account. And then we move on, income and expenditure. So now, yes.
But this interesting account, we said where I take the balance and
Yes, remember here.
And then I'm going to minus liabilities.
So no, not liabilities. So remember in our distribution, yes. So we are going to distribute the 1.7 million house, the household contents and everything. Right? And also in that, we must keep in mind that they were married in community of property. So this balance available for distribution must actually be divided into two. But we will get there once you have mastered the principles. The most important thing is for you to go back, do another similar question, or even do this one. test yourself, see if now you have a better understanding of the principles, because once you have the basic principles, these accounts that follow are actually very quick because you are posting. Okay, now
So
we move on.
now we move on to what?
Okay, now we've got our income and expenditure account. Remember, income and expenditure account, I told you that this is the account where we record things and expenses that were after date of death. Like this one, you see, remember the 4,000 Rand was after date of death. We were gonna put it here as interest on bond and then 4,000 Rand. And then where's the other one? Number 3, which is the 6,000 from this amount. So you're also gonna put your income, what's this, fixed deposit income or interest earned, whatever you wanna call it, and then you're gonna say 6,000. Then don't forget to calculate your executor's fee. So every time we collect money, after date of death, the executor must get commission in the amount of 6%. So you see here, we collected 6,000 again. So you're gonna take that 6,000 times 6%. Then it is the executor's fee, which is you also gonna have your executor's fee. So you would have your income, interest, and it's the 6,000. Interest incurred from the bond, which is the 4,000. And then executor's fee at 6%. At 6%. So then you would take what? You would take the 6,000 here that you got the amount for, and then you say 6,000 times 6%. The answer that you get there, you put it on your column because you also incurring an expense because the executor had to collect money after date of death and they are entitled to 6% of whatever they collect. Is it making sense?
I hear you.
Okay. And then we've got a fiduciary asset account. So a fiduciary asset account is an account where we've got a farm. So if there is a farm, you will see we are going to do fiduciary asset calculation. But the LPC actually is very nice at this point. It's been long since they ever asked candidates to do these fiduciary asset accounts. But however, in the exam, even if there's nothing talking about the farm, you will still put this. Like you see the way I did. Yeah, you see this way, you're still gonna write it like that in the exam, like fiduciary asset account, nil. That's it. You get a 1 mark for it. So you can't afford to lose that 1 mark. And then our last account is the estate duty addendum. But this one also, we will also do it once you master the liquidation account. Why? Because most of the amounts it'll just be you taking most of the amounts and posting them into your estate duty addendum. Yes, so yeah, I think we have done the most for today. I would suggest you go maybe for the day, practice 1 or 2 question papers and then tell me which papers you've practiced. Then later on the day, we will revisit those papers and do corrections for them so that we know that when we move on, you definitely have your what's this? Okay, what's this? We definitely have your account already.
Okay, sis.
Yeah, so the most important thing for you, master the liquidation account. Once you master the liquidation, all the other accounts actually very easy. You are literally just moving on.
So I must get inside and the LPC will get the different kind of question papers and